forefront to keep its members engaged and motivated by conducting various classes. So today we have one more seminar, and may I request our chairman, Sri Ranjit Warrior, to kindly welcome the speaker as well as the guests.
Very good evening to all of you. Eid Mubarak to each one of you at the outset, and welcoming you all to this evening CP virtual seminar on the recent amendments in the Schedule 3 reporting, accounts and audit rules. Per se, not very positive news ahead. Many of the people in Kerala, especially in Ernakulam a lot, are turning positive. So a time when all of us, it's only a humble and gentle reminder to each one of you that all of us stay safe, stay home, preferably to whatever extent possible, unless and until it is of utmost importance for us to leave. All of us are requested to stay home. Ernakulam branch, like how Deepa rightly mentioned, we are trying our level best to keep our members active, to keep our members involved and positive per se. We are trying to conduct some learning sessions in this period of lockdown, especially in Kerala. Now that we are given to understand that it might get extended to another week or so. Also on the CSR front, a humble request that we had sent from the branch a couple of days back, you might have noticed, where there is a COVID solidarity fund that we are trying to mobilize for the good interest that chartered accountants for the given point of time are probably expected from the society, or maybe if not for their expectations, it is a time when that we come and deliver to the society and be of helping hand to whatever extent possible. And then previously in the past couple of days, with the help of managing committee member and esteemed council members, we could adopt a quarantine home at Bolgati Convention Center, which is going to be having inmates from the Mulogad Panchayat and Vaipin Panchayat, where all these underprivileged members, or I would say citizens, who can't afford a home or a sole isolation, a self-isolation, that they're given restricted houses where there probably be a single bedroom, a single bathroom, and then they might have senior citizens at home, senior members at home, very small kids at home. So then for those kind of people, the government are adopting them and moving them to a quarantine home in Bolgati, and Ernakulam branch would be taking over the complete and be catering to a 3-day meal for 25 days of quarantine period of time. And also, we also request that if at all a member who feels that the branch needs to be involved in certain ways, that you need our involvement, there's something help of which we could be of to any sectors, to any places. Thankfully, with the help of Alua Chartered Accountants Association, we'll be definitely venturing out to a good initiative that would be formed under them. And similarly, so if you feel there is any positive or a possible place that we could be of help and importance, please let us know. We'd be very happy to assist, help, and be there for the good interest of the society. With these very few little words, the importance of the speaker and importance of topic, if I can say, we've got a 160 plus turnout already, and it is still ticking. So at the outset, we have this young gentleman, dynamic WIRC Regional Council member, CA Chintan Nareshbhai Patel, who's here joining us live from Ahmedabad branch Ahmedabad WIRC region. A very warm welcome to you, Chintan sir, for joining us today for this session. A good fine evening, I would say, after probably a good Eid lunch that some of us would have had a good opportunity with, and after a cup of tea in the evening, all of us are here to witness this fine session. We are also joined by our very own SIRC member and immediate past chairman, Jomon K. George sir, for this session. Very warm welcome to you, Jomon sir.
Talking about coffee, tea, I think you forgot to mention about what we are doing for the policemen.
Policemen, oh yes. Having said that, 4 p.m. is when we are also for the good interest of the good, accepting the involvement of the policemen, the effort that these people are doing on the roads 4 p.m. we are serving a cup of coffee, a cup of tea, and a small snack for around 100 policemen in the city under the banner of Institute of Chartered Accountants of India. You should have seen their faces, smiling photos that I received yesterday. In fact, I got a personal message from Commissioner Sir, IG Nagaraju IPS, saying that Madhava Seva, Manava Seva. You should see the smiling faces, and that is all. Nothing probably a money can buy for. So the Ernakulam branch is undertaking this activity as well. We've also decided that we are given to understand at the General Medical College at Kalamasheri, there's shortage of drinking water. So probably we would venture out and we will deliver and see what we can do in this front as well. So several initiatives that we are trying to come up with. Need your wholehearted support also, please. And with these few little words, let me once again welcome each one of you to this great seminar that we are going to witness today. Thank you. Back to you.
Thank you, Chairman. Now, before we begin our session, may I request our past Chairman of SIRC and member, CA Jomon K. George, to kindly address the gathering.
Thank you. Good evening to all of you. Very dynamic Chairman of the branch, Ranjit Wadia, who has very passionately narrated the CSR activities, particularly in the wake of COVID, that the branch is doing. My sincere compliments on behalf of all of us, to the entire team, managing committee, for taking care of the Bolgati COVID center, where very hapless people from Malawgad have been admitted, or rather brought for better care and recovery, where we are providing the 3 meals a day. And of course, for the policemen who are doing this yeoman service on the streets in this difficult times, providing them snacks. It's God's job. Let us all contribute to the Solidarity Fund and make it a grand success. No single pie of that would go unutilized. It will go to the most deserving people, and feeding all those hungry people, and also taking care of this policemen and nurses. Today are like angels, gods and angels. They're doing yeoman service. So my compliments to Chairman, Vice Chairman Jose, Secretary Deepa, immediate past Chairman Roy Varghese. Chintan sir, Roy Varghese brought the Best Branch Award on All India basis last year, and year before last also. Srinivasan is also there. We did it in 2 years in a row. We had the Best Branch Award, and Ranjit is working overtime to hit a hat-trick. He's on a hat-trick now, so we are all supporting him. Hopefully, he will do that, and a lot of activities, as Deepa rightly said. COVID times, the cliche is that when the going gets tough, the tough gets going. So on engaging the members and the students, batch after batch. Yesterday, Jose is now in charge of the academic affairs. Yesterday, we inaugurated the 39th batch of orientation. 3-4 days back, we had another batch of ITT. So all the mandatory courses and our regular coaching classes, the branch is in full swing, not deterred by the difficulties posed by COVID-19. So using the best possibilities of technology, the branch is engaging members, and this session is no exception. One important session in that direction. Most importantly, to welcome and to address CA Chintan Patel, a young dynamic regional council member who is serving his 3rd year of the first term in the WIRC, who is extended his knowledge arm down south to Cochin. And I was saying informally that post-COVID you should come down and we'll have a lot of interaction. And he agreed that he would love, everyone loves to come to Kerala. Post-COVID, yes, most welcome. Thank you for joining us this evening. And other managing committee members and Ranjit, you have hit 100 here, not YouTube, here itself. So like, as I always say, like a quick ton by Virat Kohli. So IPL has been suspended, but our game is very strong. Members have joined in large numbers. Good evening to all of you. Extremely delighted to be with you this evening. While we are all, locked up and a little bit incapacitated in terms of mobility, we're having this wonderful session on a topic which is of very great importance, paramount importance at this point of time. Amendments to Schedule 3 to the Companies Act 2013 and the recent amendments which have happened in the company's accounts and auditors rules. I'll not get into the shoes of the speaker, but since topically, let me take just 2 minutes. The schedule, before going to the schedule, it is chapter 9 of the Companies Act 2013, which deals with accounts of companies, section 128 to 138. And then it is chapter 10, which deals with audit and auditors. That is section 139 to 148. Chintanji is okay? Is that right? Yeah, yeah. And it's from 129 that we don't go to any schedule directly. We have to travel through a section of the Act to reach a particular schedule. So it's section 129, which deals with financial statements, which is further reiterated in section 134, that we move to Schedule 3. And Schedule 3 has 3 divisions, as you know. And one is the Division 1, which deals with the non-Ind AS companies, that is companies with net worth of less than 250 crores. Division 2 is of Ind AS companies, and Division 3 NBFCs. So there has been major changes in the Schedule 3. But I don't know if it's good news or the bad news. It is that calls for huge disclosures, but these amendments are applicable from financial year 21-22 only. For the years that 2021 that's closed, and we have started some of the listed companies and tech companies, we have completed the audit of 21 by this time, 2021. But Schedule 3 amendments, which Chintan is going to deal with, is applicable for financial year 21-22 only. But that doesn't mean that we can relax, because as the presentation unfolds, you would know that the presentation requirements are so demanding, so challenging, and our medium-sized corporates, our clients, none of them are equipped. It essentially becomes the auditor's job. It is all for the auditor to the disclosure under the Companies Act. It's the auditor's job. The accountant is happy finally if the trial balance tallies to got the whole story. And the rest, aging today, aging is not just debtors, creditors, capital work in progress, and intangible assets under development. The aging has to be given. So I remember we used to have share money advance spending allotment. And then finally they said it's outstanding for more than a certain period. It should be shifted to current liability. I remember my friend Prashant Srinivas, now the current chairman of the Kottayam branch, saying, in some of the balance sheets, I have seen this. My father, late SSIR, has seen this. My grandfather has also seen this. So 3 generations share money pending allotment has come down. So this is slowly changing. And they say that if it's really not that, shift it to a current liability, either refund or deal with it otherwise. So huge changes, demanding changes, which Chintan Bhai would enlighten us. I think the spirit is to have substantially more of transparency in presentation and disclosure. So aging, I mentioned about financial ratios, one has to list out. Then on the utilization, today everyone seems to have become a banker's friend. In corporate disclosures, the banking requirements are getting paramount importance. So here we have, if you have current working capital loans, whether your quarterly statements and current assets matches, a lot of things, and the long-term loans, utilization of funds, whether that has been proper and appropriate as for the intended purpose, and so on. It's a very long story, which Chintan Bhai in the next 2 hours or so would enlighten us on. And talking about the audit and auditors, CARO 2020, which is deferred again, which will be applicable from the financial year 21-22. So March 21, there is no immediate concern, but the learning should never stop. So Schedule 3 amendment as well as CARO 2020 is not applicable for FY 2021, but yes, for 21-22, a new Schedule 3 and CARO 2020. CARO 2020, I hope Chintan Bhai would touch upon, but it is again asking the auditor to have foresight. The auditor had to have a hindsight and had to mention about what's happening in the present. The new CARO 2020 requires the auditor to learn some Jyotisha, we call it astrology, and then predict about the future of the company as well. It's so demanding. So very challenging times. Let us gear up for sessions like this. My sincere compliments to the entire MC team, branch, Ranjit, all of you, for organizing this program. I would like to stay through, though I have another meeting at 5:30. I would listen to Chintan Bhai. I have taken a lot of time, but I thought this kind of an intro would be probably relevant and contextual as we take off on a session like this. Thank you, Chintan Bhai, once again for supporting the Ernakulam branch. And Ahmedabad branch, as we know, we have had a legendary Talati sir and all that. We have a lot of senior past residents from them. And Ernakulam branch now is joining on the fitness program. So we are flexing muscles with Ahmedabad branch, and sure we'll have more programs together. wish the program all the success it so richly deserves. Thank you, Ranjit, Deepa, for the opportunity. Thank you all. Stay safe, stay at home, stay determined. Not stuck at home, safe at home.
Thank you, Joman sir, for that wonderful introduction and setting the pace for this meeting. It's a pleasure to introduce CA Chintan Patel, a regional council member of WIRC of ICAI. It will take me a minute to read out his qualifications. He's an FCA, a CPA from USA, CS, certified IFRS from our institute, ADISA, and the CISA. He's a past chairman of Ahmedabad branch of WIRC of ICAI. He's also a co-author of the book on Quick Guide to Ind AS and ICDS published by Taxman, a practicing chartered accountant with more than 15 years of post-qualification experience. He's also a mentor and editor of Knowledge Update channel on YouTube. With these words, sir, may I request you to kindly commence the session on recent amendments in Schedule 3, Accounts and Auditors Rules. Over to you, sir.
Thank you so much, Deepa. And my special thanks to my council colleague in region, Mr. George, because he has been fantastic, because he has actually set up the tone. When I look at the Schedule 3, before I set Schedule 3, he has set up the whole tone, sections, from sections to the schedule. And one of the most important changes he has briefed upon. I think the best thing, obviously, I'm missing out to talk with him in person, but we'll definitely take out some time to see that how can we meet in person once this COVID is over.
My pleasure.
Thank you so much, Chomanji, for sparing your time, because obviously it's a privilege to have my council colleague along with this at Ernakulam branch. And my special thanks to the chairman of the Ernakulam, Ranjit. I think the way you have been doing it, fantastic. My compliments to you, the whole team of Ernakulam. Because this is the era where everyone is struggling. Whether it's Gujarat, Maharashtra, Kerala, or any state in India, everyone is having a lot of issues on COVID-19. And during this phase, I think if you ask anybody with 30 years age, 50 years age, 80 years age, they have seen for the first time this kind of thing in their lifetime. So this is an unprecedented time for everybody. And for this unprecedented time, what is most important is that we all should be united. We all should be available to support each other. And when I look at your activity and your initiative for the members and for also the person in general, I think it's a really commendable job. Ranjit, the whole team are doing it. So fantastic job you are doing. Deepa, you've been doing fantastic MOC and trying to see that everybody is, and the chorus of the meeting has been there. And being a secretary's job, you're doing the fabulous job. My thanks to Jose, the vice chairman, then also the treasurer Joseph ji, and also the past chairman, as I mentioned, Srinivas ji and Roy. I think they both were the past chairman under whose leadership Ernakulam branch has got the best branch award. Lot of pressure on Ranjit to achieve this, but the way he's working, I am sure, and my best wishes to you also, that this year there will be a hat trick of Ernakulam branch to get the third reward. Now I just take this opportunity to share my screen and then we can run through my presentation. Okay, is my presentation visible to all of you?
Yes, sir, it's visible.
Yeah, fine. So as basically,
Can you make it full screen? Is it full screen now?
it is not full screen.
Can you?
It is full screen. It's full screen. Yes.
All right. Okay, fine. Carry on. Sorry.
Yeah, okay, fine. As Mr. George has actually given a brief understanding that there are three divisions in the Schedule 3. Division 1 is applicable to the accounting standards. So the companies who are required to apply AS. Division 2 for Ind AS and Division 3 for NBFC. Now these changes have been introduced on 24th March 2021. And when the changes were introduced, at that time, the first thing which is applicable and relevant for all of us to look at applicability of these particular changes. Because is it applicable for the financial year 2020-21 or next year? Because 24th March was the date when it was before 31st March. So we look at the applicability date, and it mentions that it is effective from the 1st April 2021 onwards. So now the question is that 1st April 2021 on or after means what? Because we are a professionals, we are chartered accountants, we go through a lot of detail in every provisions, and then the question comes, the management signs on the date which is after 1st April 2021, auditor signs on the date which is after 1st April 2021. So the signing date on which the accounts have been signed, authorized, approved is a date which is after 1st April 2021. Then from which date this should be applicable? So that a lot of confusion was there, a lot of things were there, and we also asked MCA to clarify. MCA has not given clarification officially. However, as per the understanding and discussion which has been there, it is now settled and it's clear that this is applicable from the financial year 2021-22. So the current year for which we are right now is going on, for that year this is applicable. But this is a critical for even 2021. Why? The reason is that every figure which is reflecting notes on account should have comparative period. So when we are focusing on 31st March 2022 balance sheet, we need to ensure, we need to see that there is a comparative 31st March 2021 and that need to be reported. So even though we need to provide disclosures next year for financial year 2020-22, however, we have to ensure that the information for the period ended 31st March 2021 is also available. And if some information is very critical, you have to be very sure about this is going to be also disclosed and reflected in the next year's financials when you report. So in my view, these changes are something, even though it is applicable from year 21-22, however, it is one of the most important thing, because I will say these are one of the most important amendments in the financial statements since the introduction of the new Companies Act. Companies Act 2013 has been introduced, where many issues, many changes were there. But the changes were been there for 2 years, 3 years, 4 years. Every year, the amendments have been introduced and the Companies Act 2013 has been modified. But if I ask you a question, that the Schedule 3, when it was modified drastically, I think that was the only this particular period where it has been drastically modified. The number of disclosures which are required under Schedule 3 are very, very large and high. During my presentations, when I focus on the requirements, you will realize that this information is something which has been certain times has been held as a part of window dressing. So that means what the government is aware that there are few information which are very critical, which are very crucial, which may not be required by the accounting standard or Ind AS. However, this is something which is required for a better transparency and the information for the stakeholders. So with this objective, the Schedule 3 has been modified. I'm going to focus on the primary Schedule 3 and also the accountants and auditors rules which have been modified on 24th March 2021. As George has referred about the touching upon CARO, yes, I'm going to also touch upon the CARO provisions which are relevant to Schedule 3. Because if I look at the reason why the Schedule 3 has been amended, the source of the amendment is from the CARO 2020. So that's why what I have done is that I also touch upon the important provisions of CARO 2020 and also the Schedule 3 amendments. They both need to be seen clubbed together just to understand that what is the reason and objective behind the changing the provisions. Let us first look at the Companies Accounts Amendment Rules 2021. Just one question: is there any chat box where anybody can ask question? Deepa?
Yes, with the chat box is there. Deepa, you can ask the participants to raise their questions in the chat box. That's what you wanted, Chintan Bhai.
Yes, that's what I want. Thank you.
We'll have an interactive session towards the end also. Deepa, you're there? I'm talking on your behalf. Doesn't matter. Okay, we have a chat box and
Fine.
we expect a lot of questions as we go back. Yeah. And
Sure.
probably we'll take a break halfway through.
What we can have, we could have a little bit break in between. So once accounts amendment rules is over, I will wait for your questions. So instead of waiting till the end and the responding to questions, I would like to touch upon questions immediately after the particular part is over. So there is a chat box. Feel free to raise the questions, and I'm there to really give response. Your questions will also give me a lot of learning to me. So for my my learning point of view also, please ask questions. We can have a discussion once this particular block is over. So now let us look at this first amendment is a Companies Accounts Amendment Rules 2021. As this is mentioned here that this is effective from 1st April 2022. Now, why and how? On 24th March 2021, when this notification was issued, it specifies that this provision of audit trail is effective from 1st April 2021. Now, having these provisions effective from 1st April 2021 is a very important issues for a lot of corporates and also for accounting software companies. Now, let us look at that what this provision requires. Mandatory use of accounting software having audit trail. It is provided that for the financial year commencing on or after 1st April 2022, as it is changed now, every company which uses accounting software for maintaining its books of accounts shall use only such accounting software which has a feature of. Now, let us, before I go to the feature of, let us first focus on what is requirement. It is applicable to every company. So, even if it's a private limited company, if it is a small company, it's a large company, listed company, unlisted company, there is no exemptions for any of the companies, every company. Point number one. Second is which uses accounting software. So if you are using the manual way of recording your books of accounts, in that case, this provision is not applicable. So, however, in today's world, in my view, more than 95% may be using the accounting software's computer's way of maintaining books of accounts. So, if you are a company and having or uses accounting software for maintaining your books of accounts, then it provides a lot of responsibility on your shoulder. It says that you should use accounting software which has a feature of, now one, there are three very important points which I've covered under, which is feature of. Point number one, recording of audit trail of each and every transactions. So that means all transactions, each and every entire, there should not be even a single transactions which is possibility of not being recorded, and that the audit trail. Now, what is audit trail? That is again one very important thing which you have to see. The audit trail is basically a trail of the events. So events of recording, deleting, editing, that is called the sequence of events with a date and timestamp, that is called audit trail. So what it requires, audit trail of each and every transaction. Second important thing, it should create an edit log of each change made in the books of account along with the date when such changes were made. So first talks about audit trail of all transactions. Second, it talks about a situation where it says that you should be able to create, the software should be able to create edit log. So wherever some change is happening, every change, even though the change is made and deleted. So for example, if I pass an entry of a stock or closing stock on 31st March 2021, that is of 10 crore 55 lakhs rupees. Now that was passed on 6th April 2021, closing stock 31st March is a 50 crore 10 crore 55 lakhs rupees. Now subsequently on 10th July 2021, the amount was modified to 8 crore 75 lakhs rupees. Then on 5th August, the amount was modified from 8 crore 75 lakhs rupees to 9 crore 25 lakhs rupees. So this is the sequence of event which is happening. So that has to be edit log. That edit log should provide you the chronological order and every time and date, the amount originally, the amount change, voice change, on which date, on which time it is changed, then again change, so that the edit log of every change should be available in your accounting software. That is the point number 2. Now, point number 3, it says that very important thing, ensuring that the audit trail cannot be disabled. Now, there are many softwares, even in certain SAP softwares, I have seen that, certain ERP softwares, I have seen that, where they provide the right to the top management that for certain days, 10 days, if they wish, they can disable the audit trail. Now, here it says that the accounting software cannot provide the feature of disabling even for a single minute. So it cannot be disabled. Audit trail cannot be disabled for a few days, few moments. That is not possible. That is what the this particular amendment rules is speaking about. Now, if I just look at the what is the logic behind this, I think the purpose is very clear that in India, per se, there are many cases where the accounts have been manipulated, has been changed, but there is no log available of changes. That also gives a lot of comforts for accountant and the management to change as per the requirement. So if I just look at the across the globe in European and also in USA, the laws requires that there has to be audit trail of every transactions. So even if you're using some software which are based or which has been approved by USA or Australia, like QuickBooks or Zoho, they already feature of audit trail. They are already compliant with this requirement. However, in India, when I talk about, there is a demand, there is a high demand that a software should not have audit trail. So I think with this, what is the very clear focus that the mindset of the management, the mindset of accountant about the changing the transaction will be revealed when the audit trail has been taken by the department for some scrutiny or for review. So this is what this requirement as far as this concern. Now, when it was issued on 24th March 2021, it said if it is effective from 1st April 2021, which is not possible. All the accounting softwares, every companies need to upgrade themselves. So for upgrading the whole softwares and to ensure the compliance with this requirement, it requires a lot of time and efforts for these companies. And that's why there was a representations and MC also understand, which is genuine in need. That's why this was deferred to be effective from 1st April 2022. So this audit trail, the provisions of requirement of audit trail in the accounting software which you are using it's effective from 1st April 2022. That is from next year onwards. However, this is very crucial, which really affects the way we are preparing our accounts. Now let us look at what is the requirement of the same of audit trail under Auditors Amendments Rules 2021. Under Auditors Amendments Rule 2021, it mentioned that whether the company in respect of financial year commencing on or after 1st April 2022. So that means audit trail has been postponed to 2022, April 2022. And for that year, the auditor has to report that whether the company has one, used such accounting software for maintaining its books of account, which has a feature of recording audit trail edit log facility, and two, the same has been operated throughout the year for all transactions recorded in the software. So I think if you just look at, it says that throughout the years, that means even if any client, any company starts using on 10th April 2022, it is not called throughout the year. So here it says that one, it should use a software which is audit trail, audit log, and it should be done throughout the year for all transactions, no exception as far as transaction is concerned. And next point is something which is very critical, which I'm unable to understand, that what would be the reason why this is on auditors to understand. It says that the audit trail feature has not been tampered with. Now, as an auditor, how can I know that it is not tampered with? I am not a security expert. I am not a cyber crime expert where I can look at into the software. I can understand is it tempered or not tempered. I think this is something which requires a lot of deliberations. There's need to be have a more that there has to be a more guidance available. What is the expectation of MCA from these particular provisions? But in my view, that what can happen over the period, that the software companies need to provide a certificate from an international certification guy saying that their software is in compliance with MCA rules. If they just provide this certificate, I think then all the users of that software, all the auditors of that users will have a sigh of relief, because they can really ensure that the compliance is there. But however, if it has been casted upon each company or each auditor to do that, it's something which is very critical, very big for the auditors to understand. And last is that the audit trail has been preserved. So like the maintenance of records of the accounts, same way the audit trail also need to be preserved by the company for the period of which is required. So I think that is what is required as far as the audit trail is concerned. Now, before I move to the next point, do you have any questions on audit trail? Okay, there is no questions in the chat box. However, in case if you have any questions, feel free, even if I'm in auditor.
There's one question in the chat
Yeah.
box. Whether applicability of this amendment is effective both for Schedule 3 and audit report effective financial year 21-22 only. Overheard a view that for audit signed after 31/3/2021, the amendment is applicable, but for Schedule 3 from financial year 21-22 only. Please confirm.
Yes, I think I have mentioned that in category earlier, because I know that there's a lot of confusion. Because as you are mentioning is completely the correct the fear as far as the standard is concerned. As you are signing, the date of signing of the auditor, the date of signing of management is after 1st April 2021. There's a lot of fear. However, it has been agreed, not formally, but it has been agreed. It has been consensus across all the boards, all the companies, and also within the ICAI, that is effective from the financial year 2021-22, not 2021. I hope now it's very clear. It is effective from financial year 2021-22, not 2021. Even though I understand there is a little apprehension as far as the signing date is concerned, but we need to look at from the way it currently the trend which has been taken, currently the conclusion which has been taken on this aspect.
So we've got a couple of more questions.
Deepa, I'm unable to see the questions. Can you just
Q&A chat. So there's a Q&A box, sir.
Oh yeah. Now I can see.
Yeah.
Okay, just a minute.
Yeah.
Fine. Krishna Raj has asked question. Any limit for applicability to the audit trail, basis of turnover or capital or listed or listed? Sir Krishna ji, there is no exemptions, there is no exception. It mentions every company. So even if it's a small company, a private limited company with a turnover of 10 lakhs rupees, or there is loss of 1 lakh rupees, still this is applicable to in all the companies' cases. Then whether Sean mentioned whether MCA is expecting the auditors to use audit tools while conducting the audit, whether tracking of audit trail is the first step in this regard. Sean, actually, basically, the audit tools requirement is not what the MCA is looking for. I think they are just trying to keep a check on the auditors, check on the company, not auditors, check on the company management that they use the software which has all the features. Now, as far as the auditor is concerned, they want us to just see and confirm that basically the company is following what the MCA wants. So it's just like maker checker kind of concept, but they ask the companies to do this and they want us to review and confirm compliance with this. So yes, I understand that the last point which I mentioned, that not tampered with. I think not tampered with something which is very, very difficult for auditors to confirm. So I think here some clarification may come. Under ICAI, we are in a position, we are right now drafting a guidance note on Schedule 3 amendments, and very sure it will be available for for all of us to really comply with it, where there may be more clarifications on these aspects. But I don't feel that the MC is requesting or asking the auditors to use any audit tool. But yes, if we use audit tool, our job may be very easier for all of us. Okay, I hope your queries have been responded properly. If any questions, please feel free, and then we can definitely get back to your questions, right? So now with this, I'm going back to the next point. But in case if you have any questions, feel free to write in the Q&A chat box. Okay, now going to the next point is on the other amendment rules, which is in accounts, that is matters to be included in the board of directors report. Addition of the following clause in Rule 85. One, it says that IBC, in case if any application is made or any proceeding is pending under IBC insolvency and bankruptcy code during the year, then the status at the end of the financial year is to be provided. Next point is on a one-time settlement. If anybody has entered into OTS settlement with a bank or financial institutions. Now the cause of concern for the government is such that if you want to obtain a loan, you give a valuation report. And when you want to obtain a loan, the valuation report which is given at that time, the value is generally high because you want to take a loan and that particular amount is provided as security. But when you want to basically settle for a lower amount, at that time there is possibility that the valuation of that security comes down drastically low. So here it says that if there is a difference between the amount of valuation which is done at the time of obtaining the loan from bank and financial institutions and at the time of one-time settlement, then that need to be provided. The details thereof with the reason is to provide as a part of board of directors report. Now coming back to the Auditors Amendment Rules 2021, here the first very important change is that the SBN reporting, specified banking notes, SBN reporting was started earlier at the time when that demonetization happened. So now demonetization is already over. It has no sense to keep that particular reporting. So SBN reporting, the comment has been removed, which is a good thing which is done. Next point is that whether the dividend declared or paid during the year by the company is in compliance with section 123 of Companies Act 2013. So here it requires the auditors to confirm compliance of section 123 for the dividend which is declared or paid during the year. Now with this, I'm coming to Schedule 3 amendments. So let me know if you have any questions, further questions. I can deal upon the questions. Okay, I think there's no further question. I move to Schedule 3. Even Schedule 3, I also wait for a couple of times to see if you have questions. So any questions, feel free to put your questions in your question Q and answer chat box. Now Schedule 3 amendments. See, if I just look at the Schedule 3 amendments, and then based on the changes they have done, I have divided the amendments into the around 6 buckets, right? So first, which I would like to say is that I feel that it is maybe the reason of amendment is to improve transparency and useful for financial analysis. So there are 6 amendments which have been done where the focus has been to ensure that the transparency, the information should be available, the more information should be available to the stakeholders for enabling them to take decisions. Then there are a few informations where they want to provide related groups. There are some closed group transactions are there, so they want to get more information on the closed group. So there are two amendments with respect to that. There are immovable properties and intangible assets. There are some property related transactions or information which is to be provided. There are three amendments which are related to closed controllable property. The fund movement is one of the most important change requirement for the government, because wherever something happens, the fraud has been always with respect to the financial statements or fund. So they want to ensure that the fund has to be applied for the purpose for which fund has been borrowed. Plus, there should not be circulation or routing of the funds. So A gives to B, B gives to C, and then C gives to D. So the circular routing of the funds. So there is a movement on the control on the movement of fund is what is expected by them. So there are 5 amendments which have been there, which relate to the fund movement control. Then there are few disclosures which just want to ensure that the laws and regulations which have been there is complied with it. And there are 5% changes which are related to presentation related changes, where they want to improve the presentations of financial statements. They want to see that similarity, comparability of the financials are there. So there are the 5. So 5, 15 plus 21 plus 22, 24, 25. Around 25 changes are there, which are 25, 26 amendments are there, which are being reflected, which has been added by the Schedule 3. So right now I am focusing on Schedule 3, Division 1. However, under Division 2, so as I mentioned earlier, Division 1 is for AS, Division 2 is for Ind AS, Division 3 is for NBFC. What they have done, Division 1, for example, there are 25 amendments which are for Division 1 amendments. Division 2 for Ind AS, so 25 plus few more changes in Division 2. Division 3 NBFC, so that includes Division 1 25 plus few to Division 2 plus few under Division 3 NBFC. So the changes which I'm looking for right now, the Division 1, however, these changes are also effective and applicable for all the companies, whether the companies are preparing as per accounting standards, whether company is preparing as per Indian accounting standards. So whether it's AS or Ind AS, in both the cases, these changes are applicable. And as I mentioned, and I'm just repeating again, that this is effective from financial year 2020 to 2021-22. However, the comparative is required to be provided, so 2021 also need to be ready with these changes, but this is to be provided next year 21-22 with comparative 2021. Let us look at the first very important bucket of the improving transparency and useful in financial analysis. Now these buckets which I mentioned, 6 buckets, these are not something which has been laid down or provided in the Schedule 3. This is what I believe. I have just tried to understand this and group and regroup all the amendments so that we can able to understand very easily and very simply. So the focus of these to just make it more simplify, more easy form, so that we are able to understand, and then we can guide the clients, and then we can look at the compliance of these changes. So the first bucket is on improving transparency and useful in a financial analysis. Now for this change is the first, there are 6 changes. One is on trade payable agings, second is on trade receivable aging, then there's a disclosure regarding revaluation, CWIP and intangible assets under development aging, and there are disclosure of 11 ratios. In my view, these are one of the most important amendments as far as the Schedule 3 is concerned, which is going to be applicable and very important to large size of companies. See, all are applicable to all companies, but when you look at the applicability as far as the having a transactions, these are the set of transactions which are going to be applicable, and to all the companies. So I think we need to be very, very careful as far as these changes are concerned. Let us look at the first is a trade receivable aging. That is what the first is, focusing on a trade receivable aging. Now let us look at what is the changes which has currently been required. Currently, the Schedule 3 says that you need to provide your receivable outstanding into two parts. One, more than 6 months, and second, less than 6 months. So for so many years, we are providing the disclosures into two parts, up to 6 months and more than 6 months. Now that particular thing, when I look at the more than 6 months, let's take a case, a company has a receivable of outstanding of maybe 10 crore of receivables is outstanding. Out of 10 crore receivables, there are 3 crore receivables with aging of less than 6 months, and 7 crores receivables are more than 6 months. Now, whether this particular information provides you much more information, in my view, it does provide information. It does give me guidance that there are 70% or there are 7 crore information amount is outstanding for more than 6 months. But however, it may just ask me to raise some kind of question, then why it is outstanding for so long. But today, the scenario is such where 6 months is a normal credit period. 3 months, 2 months, 4 months has been increased to 6 months in a very normal cases. So there's always a belief or understanding in the mind that fine, 6 months, and it may be possible that because of the COVID-19, it may be for 9 months, it may be for 10 months, 12 months. There can be few which are long outstanding. However, that may not be very high. Had it been very high, the provision can be very high. But when I look at the provision amount is very less. So I assume that the 7 crore amount which is outstanding for more than 6 months, the importance which is given to this information is not a very high. Now the same information, if I say that 10 crore is receivables, or 10 crore, 3 crore is less than 6 months, 7 crore is more than 6 months. Out of the more than 6 months, 7 crore, then 3 crore is between 6 months to 1 year. So 3 plus 3, 6 crore up to 1 year. 1 to 2 years is 1 crore. 2 to 3 years is 2 crore. And more than 3 years is 1 crore. Now, these informations is definitely provide more information to me, as around out of 10 crore, 6 crore is only within receivable within within the period of 1 crore amount which is receivable after for outstanding for more than 3 years. So that's why this also raises a lot of eyebrows of the stakeholders, that why this amount has been outstanding for more than 1 year, more than 3 years, and still the provision is not made. Because when I look at the amount of provision, books of account is just 10 lakhs rupees, and the amount is outstanding for more than 1 year is around 3 to 4 crore. So when the 3 to 4 crore is outstanding for more than 1 year, why the amount which of provision which is made is very less? So this is also cast additional responsibility on the auditors to be more vigilant towards the aging, because this is reflected, and when it's reflected in notes to accounts, it will have a Pandora's box and have more questions for the company and for the stakeholders, so that they may ask questions. So I think this is what they have done. So one very important thing again, that what is done is that the aging bracket, which was a 2 aging bracket earlier, less than 6 months, more than 6 months, now it has been increased from 2 to 5. That is what, less than 6 months, 6 months to 1 year, 1 to 2 years. Okay, so 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So this breakup is additional as far as comparison to earlier period is concerned. And now when I look at this breakup, we also need to look at from here. So this amount is to be again classified into what part? Undisputed and disputed. So what is the amount of undisputed? What is the amount of disputed? Then good, doubtful. So good, doubtful. So the receivables need to be classified into the part of basically undisputed and disputed, undisputed good, undisputed doubtful, disputed good receivables, disputed doubtful receivables, and that is to be provided in this classification. And as I mentioned earlier, every information in your notes on account should have a comparative figure. So when I provide for 31st March 2022, I have to provide for 31st March 2021 figures. So that is also be part of my notes on accounts. One very important thing is that how to calculate aging. For the aging, it says that you will calculate from the due date of payment. Now, what is due date? Due date is what basically which is specified in my terms and conditions. So basically, in my terms and conditions, it says that the credit period is 30 days. So after 30 days end of the from invoice date, then my due date starts. So from that due date, how many months or how many years elapsed? That is what the aging I will do it. Now, question is that where the no due date of payment is specified. So it says that in case the no due date payment is specified, the date of transaction, date of invoice, or date of transaction is the date from which you will compute the aging report. And one very important thing is that if you have unbilled dues, where the invoices are not issued, unbilled dues, then if that is the things that you have to disclose it separately. So I think these are the few very important changes as far as trade receivable aging is concerned. And in my view, this will really open up, I think, this additional 4 buckets of classification of the receivables will definitely open up a lot of Pandora's box which have been hidden in the financial statements, where the stakeholders are unable to make any comments or any discussions on the amount which is lying there. So I think this is what is basically on trade receivables. Now let us look at the next point is on a trade payable. As we mentioned in a trade receivable, same thing is on the trade payable. So again, less than 1 year, 1 to 2, 2 to 3, and more than 3 years. So one change is there. Here there is no 6 months. So 6 months criteria which was there under trade receivable is not in the trade payable aging. So however, it has to be classified into 4 buckets, which is again going to have more information where you have to see that it is payable in less than 1, 1 to 2, 2 to 3, and more than 3 years. Again, this has to be from the due date of payment. So if I will not paid, I am required to make payment within a certain period, but I have not made payment. So if, what is the outstanding? And if I am not paid, why I have not paid? Is it a disputed? Is it disputed? So again, I need to also write down that if I'm not paying, then what is the reason? So if something I'm required to make payment and I'm not making payment, so that means it also reflects the nature of the company of delaying the payment, even though it is not disputed. So anything which is not paid, even though it is due, and even though it is not a disputed dues, then if the amount is reflected, it just provides the mental reading of that company's management of delaying, desperately delaying the payments beyond a certain period of time. So when you look at certain amount is payable and which is not paid, which is not disputed even for more than 3 years. So it raises the questions as far as the management is concerned, that why it is not being paid even though the amount is due to be payable. Is there a crunch? Is there a credit crunch, cash crunch in the company? And again, if there is a MSME dispute is going on, one has to be very careful that if you once mention that amount is payable by you, it is not classified as disputed. it is not classified and disputed. In that case, you may say, you are able to say to the court that not disputed, you are reflecting in the balance sheet as payable amount. So that means what, you may have to make payment to the particular dispute, particular the issues, if it is not classified as a disputed MSME. So here again, the classification is on two parts. One is MSME and others. So in MSME and others, both under disputed dues and undisputed dues. So as we mentioned in the trade receivable aging, under trade payable aging also, it says the from the due date of payment, and the due date of payment is not there, then it is from the date of transaction. So transaction date is what? It is an invoice date. So in case if the due date of payment is not mentioned, then you need to say it is from the transaction date, from the invoice date. And if there's unbilled dues, then these unbilled dues need to be disclosed separately. So I think that is what is been basically focusing on trade receivable and trade payable. So do you have any questions on trade receivable, trade payable? Then we can take the questions.
So there are a couple of questions.
Yeah, yes. I'm just going through Deepa. Thank you so much for being there. Suresh Krishna mentioned that do we have to provide previous year's numbers for trade receivable, payable also? Sir, yes. Sureshji, we need to provide for all figures because Schedule 3 mentions that any figures which is in notes on accounts must have the comparative figures. So you have to provide not for trade receivable, trade payable, but every figure in your notes on account should have comparative figure. And that is what the most important thing, that this is applicable from the next year, that is 21-22. However, you have to be cautious as your previous year figures, March 21 ended figures are also going to be reported, not this year but next year. So this is the time where you can also look at the planning point of view, what amount should go in which fashion. Then yes, Sureshji, you asked if you are taking a due date payment as a criteria to a certain age, then the total receivable and payable will not agree with the balance sheet numbers. Sureshji, it will agree because it is just the computation number of days. When I mention about the aging, so aging says that 1 year, 2 years. Now 1 year from which date? Now so amount which is outstanding is 100 rupees. Now 100 rupees which is outstanding, is it outstanding for 6 months, 2 years, 3 years? So how to calculate 6 years, 6 months, or 10, 2 years, or 3 years? So for computation of my aging, I need to look and go back from due date, but amount is in 100 rupees only. So so this is going to match. Sureshji, I hope I'm clear. In case if you have any doubt, please let me know. I will be more than happy to resolve your questions. Unbilled dues, how to we track? I think there is something beyond. Okay, unbilled dues. Basically, unbilled dues. Basically, it is a part of your system. So, what is most important thing is that for tracking aging, see, unbilled dues is what you are not raised invoice. That is unbilled dues. So obviously it would be very easy for you to track because when invoice is not issued, that means you have some other way to raise up bills. So that is always being captured in your accounts. There may be different system for your accounting softwares. However, it will definitely be available in your balance sheet separately because unbilled dues means where invoice is not issued. So obviously you're going to track to see that this is going to be issue invoice. So any receivable but the invoice is not issued, your sales team, your service team who is going to issue invoice, they will definitely have tracking to know that these are unbilled or billed. So I hope these are the questions. If you have anything, let me know. In chat box there is something. Okay, fine. Yeah, Jomanji, thank you so much you being there. Now let us go back to next point is on.
Suresh Krishna is continuing the questions. I think one more person has asked a question on the Q&A chat box.
Okay, okay. Okay. Subramaniam ji asked question that in case of MSME dues, whether the aging should be based on contract or as per MSME Act, it is due date as per contract allows more time. Sir, the aging should be as per the contract, because even if for MSME dues, MSME says that you have to pay in certain days, like 45 days or certain period you have to pay, right? So MSME says that you have to pay from certain dates. But as far as Schedule 3 is concerned, it says you have to compute aging from the due date. Now, due date is what you both have agreed. Whatever your agreed dates, that is to be counted for Schedule 3. If it is MSME, yes, you have to show separately your classification to MSME and others. But however, the due date as per Schedule 3 is concerned, that is as per the contract and not as per the MSME Act. Yes, Sureshji asked question. In continuation of my question, the first slab will be only start from the due dates only. First slab will be from the start from due date. As I understand Sureshji correctly, which you're saying first slab means you're mentioning about the less than 1 year first slab, right? So first slab will only start. So for example, let's say take a case that I have some amount which is payable to be due on 31st March 2020. So if I prepare financials on 30th March 2021, it is 1 year. Now, if some amount is payable on 19, it is 2 years. If it is 18, then it is 3 years. So on the day, so we need to look at from which we have to look at from the date of invoice or from the due date or from the due date of invoice to my balance sheet date. So difference between the invoice date or due date of each invoice, each amount to your reporting date is your aging. And that aging you have to classify, is it less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. So you classify to that is called aging bucket. I hope Sureshji it is now clear. Sabu has asked question, sir, if receivable outstanding more than 1 year should be classified under non-current assets, their aging up to 6 months need to disclose. Yes, if there are very important receivables outstanding more than 1 year. So when you say receivable outstanding for more than 1 year, it means what? Non-current and current. Current and non-current is different than the basically receivable and payable outstanding more than 1 year. Non-current is what? When on the date of transaction itself, I have to receive after more than 1 year. It is called non-current. So for example, and this is aging is what? For example, if I issue invoice today, and as per the terms and condition of the invoice, the period is 30 days. So on 13th May, I issue invoice, period is 30 days. So on 12th of June, the due date ends. So from 12th June till the balance sheet date, if the amount is not paid, what is the aging I have to look for? Now, where the credit period is 30 days, today it is called current assets. Even though the amount is not paid for 3 years, that receivable will remain always a current asset, because the current or long-term trade receivable, short-term or long-term trade receivable is classified and defined as on the date of transactions. Now, in that particular situation, if I take a case where instead of credit period of 30 days, somebody is giving me credit period of 400 days. So it is a long-term trade receivable in that case, because on the date of transaction itself, my contracted period says that I have to make payment after 1 year. So current, non-current is different. Long-term, short-term trade receivable is different, and aging is different. Long-term, short-term is defined based on your terms and conditions of credit period. And aging is that even though I am required to make payment, I have not made payment. So from the due date of the invoice till the reporting date outstanding, that I need to divide into my aging buckets. So that is aging. So I hope this provides a response to your questions. Let me see if any of the questions. If the credit period is 30 days, last month's outstanding will not be captured. So, okay, Sureshji, if you can unmute yourself and if you can speak, I'm not sure that if it's possible. So that I can respond to your questions in one shot instead of dividing into the various parts. So, is it possible, Deepa, that he can unmute and speak? Okay, fine. So what I understand from your question that
let us ask the host will be there. I think Raju or Tessie. I think can you unmute Suresh Krishna? Raju or Tessie?
Yes, sir, will do.
Suresh Krishna, just unmute and ask him to ask the question. Yes.
Suresh, if you have been unmuted, you can just speak and just give more clarity on your question. Okay, maybe there will be some technical issues.
Hello, can you hear me?
Yeah, Suresh.
Can you hear me? Yeah, if the receivables, like for example, 31st March is the closing, the last 30 days, we have the credit period of 30 days for the receivable. So the invoices of March will not be captured in the receivable outstanding. That's my question. So the total receivables will never match with the balance sheet figure. The aging analysis of the receivables will not match with the receivables outstanding in the balance sheet.
Yeah, so it is less than 1 year.
Sorry?
So then you have to capture in less than 1 year.
Yeah, no, 30 days. For example, the first lab, the 0 to 30 days, for example. So the 0 to 30 days, the receivable age will start from after 30 days because the due date is 30 days. Right. So the first 30 days will not come in the receivable analysis.
Yeah, Suresh, now I got your question. So basically, we were saying that, for example, on 10th March 2021, I have raised invoice. Right? Credit period is 30 days.
Yes.
On 31st March 2021, I look at the credit period is not over. Right? So here it will be treated as about less than 1 year. And even though it's a minus, you can say it's a minus kind of aging, it is less than 1 year and you can show in less than 1 year. But you have to match and you have to tally with the balance sheet. Sureshji, I hope I'm able to respond to your two questions appropriately.
The receivable outstanding, it starts from less than 6 months, right?
Sir, less than 6 months will also include a minus figure.
Minus figure in the sense?
You're saying that, okay, are you clear with what I'm saying? That even less than 3 days, if due date is not over, still it should be part of your less than 1 year, less than 6 months.
How can it be? Because you say it's for the due date.
For computing aging, right? So aging,
Yes.
let's say that the aging is minus 30, minus 10.
So if you have 100 rupees is outstanding and 10 rupees is less than 30 days, it will not form part of the outstanding in the aging.
No, sir. Sureshji, I'm just putting your question again very, very clearly. If you will just mute yourself and then you can speak, because there is some noise coming here. Okay, so all your receivables, you need to classify into these 4 buckets. As per your question is concerned, for example, the aging is not, due date is not over. So in our case, 10th March was the date and 30 days was the period. So the due date is going to over on 10th or 9th April 2021. So on 31st March 2021, the due date is not over. However, it is to be captured in less than 6 months. So anything is less than 6 months, even if you say it's minus 20. But as far as the more than 1 year, more than 6 months concerned, that more than 6 months is to be captured from your due date period. So in your case, it is like 20 days is over from your date of transactions. However, the due date is not over. So that amount you do show and reflect in your less than 6 months bucket. Sureshji, I hope that it's clear now.
It's okay, sir. Please carry on. No problem.
Okay, sir. Thank you. Fine. So I think Sureshji was trying to put a point on one thing that if the due date is not over, then what? I think technically, when you look at Excel technically, as we are saying, then how can we cover? But the first bucket is always less than 1 year. It is not mentioning 0 to 6 months. It is not mentioning 0 to 1 year. There is a mention of 0 to 6 months, 0 to 1 year. If it is here 0 to 6 months, then there is maybe a technical issue that is a zero, but however it is saying less than 6 months. So when the less than 6 months is covered, when there is a less than 1 year is covered, then I think these all points will be part of the first bucket of less than 1 year or less than 6 months, even though it is not due. So let us take ahead next point. This is regarding revaluations. So now the next point is on basically the property plant equipment revaluations. So if there is a revaluation is done of property plant equipment and intangible assets, in that case, a reconciliation of the gross and net carrying amount of each class of assets at the beginning and the end of the reporting period, showing additions, disposals, acquisitions through business combination, amount of change due to revaluations, if a change is 10% or more in the aggregate of the net carrying value of each class of property plant equipment and other adjustment. So it says that in case if the revaluation is done and the change is 10% more, you have to show separately. And again, one more important thing is that in case of revaluation of property plant equipment, whether revaluation is based on valuation by registered valuer or not, that is to be provided and clarified as far as this is concerned. Now let us look at the requirement from the CARO point of view. Now CARO 2020, if I just look at the CARO 2020 and Schedule 3. So CARO 20 was introduced last year, then it was deferred. Now it was deferred with the very clear objective one, that there's a lot of responsibility cast upon the auditors. However, there's no responsibility cast upon in the accountants or the management of the company. So now by Schedule 3 amendments, there are many responsibilities which is on the auditors. They are shifted upon the management also to provide notes on accounts. So now the role is that the management has to comply with Schedule 3. They need to provide those notes on account disclosures, and the auditors has to check the, and then they have to confirm correctness of this disclosure in the reporting. So in CARO 20, it says that to specify the amount of change, if the change is 10% more in aggregate of net carrying amount of each property, plant and equipment or intangible assets, paragraph 3(1)(d). And then there is a mention that whether the company has revalued its property, plant and equipment or intangible assets or both during the year, and if so, whether the revaluation is based on valuation by registered valuer. So I think the both points which have been covered under CARO for auditor responsibility, which are not earlier in notes and accounts, now these points are also covered as part of the management is concerned in the notes and accounts. So let us look at the next point on a CWIP aging. I think this is again one of the very important point of CWIP, capital work in progress and intangible assets under development aging. Now, CWIP I have seen in various companies where there are a lot of expenditures has been capitalized for so many years, and for so many years this goes and lying as such. Now, this CWIP aging will again provide a lot of information in your schedule. So earlier there was no need to write down for how many years it has been outstanding. No need to provide of the classification of this saving. Now it says that you have to provide the aging of the outstanding capital work in progress amount into again same bucket. So less than 1 year, less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So this again 4 buckets you to provide a CWIP. So this is again one of the very critical for manufacturing companies where the CWIP amount is very big. Here they need to dig out and they need to look at into detail that what is captured, what is the aging, and one very important thing is in these two aspects: project in progress and project temporarily suspended. So now, when you look at the project temporarily suspended, the amount is outstanding for more than 3 years or 2 to 3 years. It will definitely trigger the impairment testing, because if the project is been temporarily suspended and that amount has been lying for a long period, and then the role of auditor will come in picture to look at and understand that whether this is subject to MIP or not. So in my view, this will really be a very, very critical. Again, it says that the total should tally with the CWIP amount balance sheet. Obviously, there is no some mention of receivable payable, but yes, every total should definitely match with the amount which is there under your balance sheet things. So you need to divide this into 2 parts: project in progress, give aging, and the project temporarily suspended, the aging. For capital work in progress whose completion is overdue or has exceeded its cost compared to original plan, following completion schedule shall be given. So where there is overdue, so or it has exceeded its cost compared to original plan, you need to provide again project wise information: which project needs to be completed in which year, it is to be completed in the 2 years, 1 year to 3 years, or more than 3 years, and whose completion is overdue or has exceeded its cost. So there are two things. One thing is that whether timelines of original plan is exceeded, timelines, or the budget amount is exceeded. So in both the case where the time or cost has exceeded, it says that you need to provide the aging of these things within how much period is to be completed. Plus, details of projects where activities are suspended shall be given separately. Now, the next point is on the ratios. The following ratios to be disclosed: current ratios. There are 11 ratios which are very, very important ratios. The first part is with respect to the financials. So these 4 ratios are with respect to the ability of the management of the cash, where the current ratios, financial on current ratios, debt equity ratios, debt service coverage ratios, return on equity ratios, which is focusing on the financial part, equity, liability, and what is the return from that. Next 4 part is on basically is a turnover related, where it says that inventory turnover ratios, trade receivable turnover ratios, trade payable, net capital turnover. And then on the margin part, that is on net profit ratios, return on capital employed, return on investment. So there are 11 ratios, 11 very useful ratios with comparative has to be provided under your financial statements. And not ending with that, it again says one more thing is that you also have to explain if the change is more than 25%. If there is a change in ratio from previous year to current year, the change is more than 25%, then you need to provide explanation for such change. I think this is going to be one of the most very important change, where you to provide the explanation, reasoning for every change where it is more than 25%, because the way the business dynamisms are changing, in 24% change may not be so much a big thing. It is definitely going to happen. So here you need to provide the explanation reason of such changes. That is what is required here. This is the other one of the most important thing where you need to visually look at this. Now, before going to the next point, let me see if you have any questions answer on this up front. Right. Last point, the question which I taken was basically with Suresh Krishna ji. There's Sonu ji has asked question. Ideally, there should be a not due column, right? Sonu, that's why I think they said less than. I think Suresh ji and has asked questions which has been critical, but it said less than 6 months. So it is less than 6 months. See, the focus is not to look at the minus dates. Focus is to look at the which are outstanding for more than a period. So when you look at the objective of this is not a very technical analysis. The objective is to provide a transparency about the amount to be received, amount to be paid. So where it is like less than 6 months, will include everything else, even if it's not due or undue. So less than 6 months will include everything else, even if it's not due or due for 1 month or 2 months. Manoj ji has asked question that when the SWIP is accumulated over a period of more than 1 year for the same project, how to age the amount accumulated in different years or periods. So Manoj, as we are doing it for more than 1 year, when you're saying that, the same way when you say more than 1 year, so is it for 2 years outstanding, is it for 3 years or 4 years, based on the original date, right? So original date from which you compute 1 year. So then from that date you have to see, is it a 1 year or 2 years or 3 years. So this won't be a difficult task as far as somebody who is handling the CWIP area. So somebody, if you ask some data of CWIP, how it's captured in accounting. So you just look at in accounting that how the CWIP has been captured details, and from that, when you look at aging in many softwares, I think if you look at ERP or other account softwares, they provide you aging also for the CWIP, receivables, and payable. You will just specify the buckets as per the schedule 3. And as per the buckets, they will provide the aging. So getting aging sometimes is difficult, but not always. If you capture and configure appropriately in your account softwares, the software will be able to provide you aging very easily. Now let us look at the two very important points which are on closed group related things. One is of disclosure of promoter shareholding, and second is the loans or advances granted to promoters, directors, KMP, and the related parties. So first point is on the share capital. The promoter shareholding details to be mandatorily provided irrespective number of shares. See, right now we to provide only it exceed certain percentage. Now you have to provide information irrespective of the percentage. Even if you hold 0.1%, you hold 1%. As far as your promoter, the promoter is as defined under Company 2013. As far as your promoter, then you have to provide the information of the promoter's name, number of shares held by promoters, percentage of total shares, and if any change, then from the previous year, the percentage change during the year. So this information has to be provided by promoters irrespective of the percentage or numbers. And next important point is that on loans and advances to related parties. So it says the following disclosure shall be made when loans or advances in the nature of loans are granted to promoters, directors, KMPs, and the related parties, either severally or jointly with any other person. So even though it is allowed, it is not saying prohibition. Section 185 prohibits, however, it allows you to give loan subject to fulfilling certain conditions. Like if the special resolution is passed and the loan has been released for the business purpose, you can give the loan. So subject to the conditions, if the loan has been allowed and if the loan has been given, then the loan, if it is given to promoters, that is KMP related parties, it has to be provided. Yes, this may be sometimes in addition to AS 18 related party transactions, because there are many things which are covered under AS 18 related party transactions. But however, this requires it to also provide percentage to the loans, advancing the nature of loans. So this is what you have to provide in addition to what you are providing under your AS. But there are many things which are already covered under AS. Then you have to just provide additional things which are not covered under AS. So let me see if you have any questions, and then I will move to the next point. Okay, Manojji, fine, thank you so much. Balachandran has asked question: is there any prescribed method for calculation of ratios? Balachandranji, right now there is no basically method has been provided. We need to go by the generally accepted ways only. But if in the future some way come into picture, or possibly ICAI when provides you a guidance note on the revised Schedule 3 amendments, then if it is provided, it can be followed away. However, if there's nothing is provided by anywhere, we need to go by the generally accepted way. Okay, now I'll just move to the next point is on control over property. There are 3 points just to meet. One is on details of Benami property held. Second is on relationship with staff of companies, and third is on detailed disclosure regarding title deeds of immutable properties. Let us look at the first point, that is on Benami property held. So here it says that if any proceedings have been initiated or pending against the company for holding any Benami properties under the Benami Transactions Prohibition Act, then you do provide a disclosure. So this is applicable only in case something is initiated or pending under Benami Act. Otherwise, this is not applicable. And there is again a requirement in CARO where it casts a responsibility on the auditor that whether any proceedings have been initiated or pending against the company for holding any Benami property under Benami Transactions Prohibition Act 1988 and the rules made thereon. So there was already there under the responsibility of auditor to look at, and now there's also responsibility cast upon the management to provide notes on accounts whether there is any proceeding initiated or pending. If yes, they need to provide disclosures in notes and accounts, and the auditor has to confirm that is there any other thing which they believe is to be mentioned or this has been appropriately disclosed by the management in notes and accounts. Now coming to the next point is that here it says that is there any transactions entered into by the company with the companies which are struck off. MCA provide the list of struck off companies on the MCA websites. So this casts additional responsibility on the management to see that whether there is any amount which is outstanding, receivable or payable with the companies which are struck off as a reporting date. Because if the companies are already struck off, there is no point to check it out. And this has been done specifically because in certain cases, the receivable payable in the books of accounts of company goes on for so many years, even though the company is struck off. So there is a need to now additional responsibility cast upon the management to go through the list of stock companies and then to check is there something amount receivable, and if yes, then they need to provide the breakup of this balance outstanding into investment in securities, receivables, payables, shares held, other outstanding balances to be specified by nature, and name of the stock of companies and the relationship of the stock companies has to be provided by the management. Next point is on the properties title deeds. The title deeds of immutable properties which are not held in the name of the company. So all the immutable property. So immutable property means what? it means land and building. Machinery not. Land and building is an immutable property. If the land and building immutable properties are not held in the name of the company, in such case, you need to provide disclosures as per the table, which says that what is the line item in which it is reflected, PPE, intellectual property. So you need to mention is a part of my PPE, or it is part of my investment property, or it is held for sale, or other line item. Then what is the description? Is it land or is it a building? That is to be provided. What is the gross carrying value? Then in whose name it is held, whether it is held in the name of promoter, directors, relatives, from property held since which date they are holding, and reason why it is not held in the name of the company. This has to be provided for all properties, land or building, which is not held in the name of the company. So again, the carve-out 2020, we also cast responsibility on the auditors to say that whether the title deeds are in the name of the company or not. So again, the Schedule 3 will provide additional informations, and the auditor has to check that informations, and then they need to comment in the carve-out. Now, next important point is on control on fund movement. So before I go to control on fund movement, let me look at if you have any questions on any of the aspects. Okay, there's no further questions. I will move forward because yes, it's already 5:41, and this is one of the very important parts, that is control on fund movement. So there are 6 disclosures there, there are 5 disclosures which are very critical, which is on fund movements. That is the first one is on fund circulation. Now this is a little complex, however, very important requirements for providing disclosures. It says the utilization of borrowed fund and share premium. So where the company has advanced loans or invested fund, either borrowed fund or share premium or any other source or kind of fund. So anything, all types of fund, where all types of fund, if advance, loan or invested to any other person or entities. So it includes LLP, partnership firm, company, anybody. If any fund has been advanced, loan or invested to anyone, but why? With the understanding, which is one of the most important crucial thing, heart of this thing, with the understanding whether recorded in writing or otherwise, that the intermediary shall directly or indirectly lend or invest in other person or entities, or provide any guarantee, security, or like on behalf of ultimate beneficiary. So I think this provision will come into picture only and only in case where, for example, X private limited company has given a fund, has given a loan to Y with the understanding that Y will give fund to Z. So that is called the circulation, fund circulate, where I want to give a fund to Z, but I am giving to Y, and then I'm asking Y to give the fund to Z. That understanding such that if this kind of circulation is there, then you need to provide a disclosure of date, amount, with the details of each intermediary, then details of ultimate beneficiaries, date and amount of guarantee securities, and is that the FEMA provisions are compliant or not compliant. So this is what you need to basically provide disclosure in case the fund circulation is happening. Same way is also true for received. In case if you received fund, so in the first case you have given fund for loan, advance, or investment. Here, if you receive fund with the understanding that it is for somebody else, where you receive fund and you have to transfer to somebody else, then here again you have to provide a disclosure of this requirement. And same thing, what they have done is that they have added the responsibility also on auditors amendment rules, where it says that whether the management has represented that to the best of its knowledge and belief, other than as disclosed in the notes to accounts, no funds have been advanced or loaned or invested to any other person other than as disclosed. So here they cast responsibility on the auditors to check and confirm that there is no other movements which is not captured by the management in the notes on accounts. So this is again what is required CARO, and that is what is there under as far as this fund circulation is concerned. Now coming back to the next point is the borrowing. But a company has not used the borrowing from banks and financial institutions for a specific purpose for which it was taken at the balance sheet date, the company shall disclose the details of where they have been used. So basically, this is just providing the informations on if the fund for which it is being taken, the purpose for which the fund is taken, if it is not used for the same purpose, then you have to provide the reason for that. And next very important point is that where the company has borrowing from bank or financial institutions on the basis of security of current assets. Now this is again very important point where it says that if you're borrowing from bank or FI and it is based on security of current assets, so like you have taken CC limit which is on security of stock, receivables, then whether the quarterly returns or statements, any returns or statement which is you are submitting to the bank financial statements, are they in agreement with the books of accounts? So because there's a tendency that if I want to submit, if I give a more stock receivables, then I can get a more amount of drawing power. So here it casts responsibility on the management to check and confirm that the amount which is submitted to the bank, the amount in the books of account without in agreement. If they are not, if they differ, then you have to provide reconciliation and reasons of material discrepancies. It also provided as part of your notes and accounts. And again, it casts the responsibility on the auditors. By CARO 2020, it says that whether the company has filed and are they in agreement or not. So same way again, there's a responsibility is cast upon the auditors, and if the auditors can say that as per the notes and accounts of the management in the following situation is not in comply with, okay, but if there is something additional which is not mentioned by the management notes and accounts, then it is responsibility cast upon the auditors to mention that this is something which is not mentioned in notes and accounts. However, in these situations, in this particular quarter returns, the figure was not matching. So this is again the responsibility of the auditors in CARO 2020. Next point is on the willful defaulters. Where a company is declared as a willful defaulters by any bank or financial institutions, the following details shall be given: the date of declarations as willful defaulter, details of defaults, and so again the same thing. CARO also mentioned the fix that if somebody has been declared willful defaulters, you have to mention in notes and accounts, and the auditor has to confirm this information in the CARO reporting. Now layers. There is a requirement in section 186 that the number of layers shall not exceed the limit as specified more than two layers. So here it says that whether the company has complied with the number of layers of companies or not. If not, then the name and scene of the companies beyond the specified layers has to be provided. With this, before I move to the next point, let me see if you have any questions. I can go through your question and answer. And there is no further questions. I understand that there are many changes are there which may require a lot of deliberations. So if you have questions, please feel free to enter in Q&A. So what I will do now, as there is a time we are bound by time, it is 5:50. So now I will look at the question box at the end. So any questions, if you're so far, also in the future, please put your questions in the Q&A box, and I will look at the Q&A box at the end of my presentation. Complies with laws and disclosure thereof. If there is, there are 5 points. One is on approved scheme of arrangement. Then on charge registration. Then a CSR responsibility. Then for cryptocurrency, virtual currency, and undisclosed income. So the scheme or charges complies with approved scheme of arrangement. Where the scheme of arrangement has been approved by the competent authority, the company shall disclose that the effects of such scheme of arrangements have been accounted for in the books of account of the company in accordance with the scheme and in accordance with the accounting standards. So here it says that if anything is covered with respect to approved scheme of arrangements, then compliance with the scheme and compliance with the AS has to be provided as per the notes on accounts. And as far as charge is concerned, so whether the registration of charge or satisfaction of charge, if it's pending, that has to be provided. The reason why it's pending and the details thereof has to be provided in your notes and accounts. CSR, a lot of things are being done on CSR. The government is trying to ensure that the objective of the CSR should be really fulfilled. In a lot of things, we are seeing that the CSR money are not spent for the purpose for which this has been initiated. So government is trying their best to see that the real objective is to ensure that the money is spent for the needy, for somebody who wants the money. So the CSR rules has been amended drastically. There are a lot of things have been amending, changing CSR. The notes has been become bigger just to ensure that the CSR information is captured in notes and accounts. That is report responsibility also requires to assure about CSR, and the auditor also requires to see that the CSR money and disclosure has been provided. So a lot of things are there. Also in auditor's report, it mentioned that the compliance of CSR rules are there. So responsibility is also cast upon the management to disclose, and also on the auditors to check and confirm that the CSR provisions are compliant with it. Coming to the next point on the cryptocurrency. When I look at this cryptocurrency, it is really a very good welcome step where they are asking to check and confirm that is there any cryptocurrency where the company is traded or invested. If yes, then the details of profit or loss and the amount of currency held as a reporting date. So this has to be provided by the company in their financial statements. If any amount of cryptocurrency or virtual currencies is traded or held by the company during the year. Undisclosed income. So the company shall give details of any transactions not recorded in the books of accounts that has been surrendered or disclosed as income during the year in the tax assessment under Income Tax Act 1961. So basically, if any undisclosed income has been surrendered or disclosed as income, it has to be provided in notes and accounts. Also, it casts responsibility on the auditors, that auditor also has to mention this information in carve-out 2020 requirements. So this is what the very critical aspect as far as the Schedule 3 the thing is concerned. Now looking to the last part of the Schedule 3 is the presentation related changes. First is that rounding off. Rounding off was optional earlier. Now rounding off is a compulsory. So here it says that if the total income is less than 100 crore rupees, you have to round off to the nearest hundreds, thousands, lakhs, or millions or decimal thereof. So you cannot provide the full figure. So full figure cannot be provided. At least hundreds, thousands, lakhs, or millions you are to do rounding off if your income is less than 100 crore rupees. If your income is more than 100 crore rupees, then rounding off is compulsory to the nearest lakhs, millions, or crores. Part 1 balance sheet. The property, plant, equipment is the heading. Earlier it was only property, plant, equipment. Now PP and intangible assets is the heading. Because if you look at the heading, it says PP and then it says fixed assets and then it says intangible assets. That is not correct. So it says property, plant, equipment and intangible assets. That is a group heading, and under group there will be property, plant, equipment, and then that is intangible assets. Current maturity of long-term borrowing. If the long-term borrowing is having current maturity, which is going to mature in within 12 months, then that current maturity of long-term borrowing was shown earlier as part of other current liabilities. Now it is clarified that this should be shown as part of short-term borrowing, not other current liabilities. Security deposits. Security deposits was shown as part of long-term loans and advances. Now instead of loans and advances, it is to be shown as a part of other non-current assets. For profit and loss statements, the word revenue, the total revenue is now changed to the total income, because total income includes revenue from operations and other income. So total revenue is now changed to total income. And if you are Section 8 companies, then your revenue from operations shall also include further classifications by way of grants or donation received. Now, these were all changes with respect to AS, account standards. Now, very few changes for a division 2 in the AS. So under Ind AS, all changes of AS are definitely there. So you all have to make changes for AS, and there are additional Ind AS changes are there. So additional changes are very few, which will look into that. One is that the changes in equity. Under changes in equity, part A, share capital, a separate column has been added for changes in equity share capital due to prior period errors. So in part A, share capital, there was no column earlier. Now the column they have modified and added here. Investment property fair value. So under Ind AS, the investment property fair value is to be disclosed. In that case, you would also disclose whether the fair valuation is done by a registered valuer or others. So that information is to be provided by investment property. Finance lease obligations, current, non-current liabilities. The financial lease obligation is to be shown as a part of your face of balance sheet after borrowing. So that is what is being clarified now under Ind AS. The trade receivables, the aging schedule, along with the additional classification into disputed or undisputed trade receivables, which have significant increase in credit risk. Under Ind AS 109 financial instruments, there is a requirement to look at the significant increase in credit risk. So here it says that you have to classify trade receivable into two additional parts. That is there any increase of significant increase of credit risk or not? That particular part has to be also captured along with that, along with the receivables. Now with this, I am coming to end, and before I end my presentations and I look at your question answer sessions, my only thing is that, so when I look at the very important changes, is one, that trade receivable aging, trade payable aging, and CWIP aging. I think these three aging are going to provide the most important informations which are required. Along with that, the financial ratio analysis will also provide a lot of information to the analyst when they look at the particular investment for listed companies. And in that, if you look at the fund circulations where the funds have been moved, transferred from A to B, B to C, these are going to give additional informations. Plus, when you are taking a loan from the bank and you are supposed to provide the information of your current assets based on which you are taking the loan. So the agreement of that amount with the books of accounts will also put additional information, additional pressure on the management to ensure that they provide the accurate informations to the bank when they take a loan. So this will be a lot of information are there, but I think the information is overall is definitely there, but this information somehow, in my view, will add a lot of transparency. There may be a debate on applicability of this information to all companies or to the few companies, because I may feel that in certain cases where the company has not taken any borrowing, there is no outsiders involved, whether this kind of companies should also comply with all these requirements. At these junctures, there is no exemptions, but in my view, this question need to be pondered to understand that whether this should be applicable to all companies or there should be some relaxation in going forward in the futures. So as I mentioned, change is only constants, because that is the whole true in today's world. Because Schedule 3, Companies Act, AS, Ind AS, GST, everything is changing very fast, and that's why the fastest person, fastest professional, or any professionals who is changing the fastest in the world and is the only one is a chartered accountant professionals. Because the way we are operating ourselves, I doubt that any other professional in the world is operating like us. So with this, my best is to all of you, and I just look at the Q&A before I end. It is illegal to invest in cryptocurrency, then how can company invest? Sureshji, you have been asking fantastic questions and you have been doing a lot of analysis. So you're right that it's illegal, but possibly there may be some foreign company, and where I am a holding company and the foreign company is out of India, and that foreign company, foreign country, foreign laws regulations allow to hold and invest in that particular cryptocurrency. So during consolidation of my subsidiaries which are in foreign company, there is possibility that that can be cryptocurrency. So trading in cryptocurrency require any object clause? Sean, I think Suresh ji has already replied that it's illegal at this juncture. It is not allowed. But yes, if you want to trade, if it is allowed in the futures, then you should change, unless until your primary objective is to look at the trading of financial statements or trading of the currency. If that is the thing, then it's allowed. Otherwise, you should change your object clause if it is your main objective. As per Schedule 3, before amendments in SOCI, OCI on account of remeasurement of gratuity should be disclosed under written earning. However, we can see a lot of big four financial statements where the same is shown separately in SOCI. Okay, before amendments, the SOCI OCI on account of remeasurement of gratuity should be disclosed under written earning. However, under where the same shows separate in SOCI. See, in my view, I think Hari Prasad, you are fantastically asked the question. In my view, that components of your OCI should be shown separately. So even before amendments, I have seen many financial statements where they have been showing it as separate component. Now, I don't find any relevance why they are showing after amendment separately, but in my view, it should be shown separately because all components, nature of the components of OCI should be discussed separately. So in my view, it should be shown separately. There may not be so much clarification earlier. That is the reason why few companies are showing separately, few companies are not showing separately. But in my view, it should be shown separately. James Kutia, Anthony asked question regarding rounding of if the company is having say less than 10 lakhs income, then also rounding off to rupees 100 is required. Less than 10 lakh income, then rounding off is required. I think is 1,000, hundreds or thousands is first. Yes, so rounding off to hundreds is required. So now it is mandatory that if your turnover is less than 100 crore, then you have to do rounding off, irrespective of your compulsory or optional. Now it's compulsory, earlier it was optional. So if your total income is, let me just see, look at less than, if it is less than 100 crore, yeah, if it is less than 100 crore, in your case, its 10 lakh income is there. So rounding up to the nearest 100 crore, nearest 100 is required. Okay. Saji, I think Saji Matthew has asked question regarding audit trail. How can we confirm in software as we are not technically competent to exactly analyze if it can be untempered? Is an undertaking from company be good from Saji? I agree with your concern that we are not technically competent to understand is it tempered or not tempered. So in my view, practically, the software company should provide a certificate from reputed firm saying that the my software comply with the requirement of MCA and it cannot be tempered. I think if that certificate is provided by some reputed technical consultant, then I think that should be sufficient at this juncture, because we cannot employ some technical person just to check and compare this requirement. So a software company should provide a certain certified technical person certificate. That should be enough. That is my view. Again, and I'm not sure that how it's going to be happening over the period, but in my view, this is going to be happening in the future. Krishna Kumarji has asked question: error in financial statements in previous year, now to be disclosed separately. Sir, it was required to be disclosed separately. There are two parts: part A, part B. Part A was on share capital. Part B was other equity. In part B, there was already a separate requirement to show separately. Under part A, the schedule was not done separately. So they made it compulsory to show separately. So any restatement in part A, part B, it has to be shown separately if it is due to by error or change in accounting policy. In case software does not have the feature, can we make a comment, or is it serious to express adverse opinion? If the software does not have a feature, I think we should look at the possibility of why somebody should not use the software, because I am very much sure that once this MCS is mandated, all software companies will upgrade their softwares to comply with these requirements. Now, if all software companies are upgrading with the option for non-companies to go ahead with the software where doesn't provide audit trail, and if a company does not basically use the software which is mandated by Companies Act, then yes, you have to provide adverse comment. But along with adverse comment, there is also additional responsibility on you to understand the reason why the company is not opting for audit trail. Then the possibility or chances of manipulation of accounts are high. So I think that it casts additional responsibility on the auditors to go into detail to see that is there any possibility of manipulation or not. I think with this, I have tried to respond to. Please feel free to reach to me to my email ID, and I'm sure, I hope that I was able to justice to your timelines and to your requirements. So again, I am thankful to each one of you for patience listening, and I must compliment to each one of you for being so much active, because through all the sessions you've been pouring with your questions, and I really enjoyed giving reply to questions. It also adds value to me. So my thanks to each one of you, and special thanks to the chairman, Deepa, and the whole team for giving me the opportunity to interact with you. Now I hand over charge to Deepa.
Thank you, sir. Thank you so much. Before I get into the formal duty of proposing a vote of thanks, two things to the members. First thing, like the chairman mentioned during his welcome speech, please do contribute to our fund for COVID activities, COVID-related CSR activities. There are more members who have joined in subsequently, so I'm just repeating what he has said. We are into doing a lot of charity work in this COVID times. Please do join us. Mails have been sent. In case you need any further information, please feel free to write to any one of us managing committee members or to the branch. We'll give you further details. The second thing that I would like to bring to the attention of the members is that we have more programs lined up for you on 21st, that is day after tomorrow, sorry, 15th, we have a income tax law on charitable trusts and institutions. On 21st, there's an emerging trends on finance capital. And 22nd, we have a topic called on RERA. On 25th to 28th, there is a GST refresher course which is being organized. So please do join for maximum programs. I hope all of you are getting the emails that we are sending from the branch. In case somebody is not getting, again, please do send us your email ID so that we can send you the email. Now, thank you so much, sir. We at one point of time, we had 125 members attending this seminar. It just shows your popularity as well as the topic's popularity. You have been really patient with us when we were asking questions in between, taking time breaks and giving us continuously your feedback. Thank you so much for joining us. Ernakulam branch is really delighted to have you. We will be looking forward to hearing more from you. Thank you so much.
Thank you.
And thank you, dear members, for joining us in huge numbers and motivating us to conduct more and more programs for you. Like I said, 15th, 21st, 22nd, and 25th to 28th.